Now, I want to talk about psychological barriers. We saw them in oil last week and this week again. We're hitting one with the S&P 500. It's down year to date as well. I know the pros laugh at these, but you also have to pay attention to them. How important is the psychology of moving through an arbitrary number?
I'm a long-term investor, so I step back and look at like the 5-year trend in the S&P, and what you saw was 4 years of a real bull market, and now it's been rolling over. And we said at the start of 15, we thought that it was going to be a flat year as the market ran out of momentum, and it's continuing to.
You know, but you are a long-term investor, but you've also started a program at Calsters that you call risk mitigation, which is looking at much shorter-term horizons, 6 months. What's causing you to do that?
It's trying to balance out our equity portfolio. If you really look at us you step back and look at us, we're about 80% exposed to global GDP growth. I want to balance that with some risk mitigating strategies. So we're using some long bonds, which really the long bond in the U.S. is now the new gold standard. And then we're using some shorter term trading strategies, but they don't generate returns correlated to the equity market. So it balances our portfolio, and that's what we're looking for.
So given your perspective, a longer term perspective, you said you thought 215 would be sort of flat. 216 looks sort of flat as well, would you say?
I'm worried about 2016. I think we're going to probably have, if you took everybody's GDP estimate right now, 2 to 3%, I'm sad to say I think you can cut a full percent off of that because we're going to get hit with a whole year of this political campaign. And, you know, when I say to people, can you imagine a whole year of Donald Trump and Hillary Clinton going at each other? It just takes the wind out of people's sails. So I think it's going to be a drag on our economy. I'm worried about how well we do. Corporate earnings are going to grow, but a smidgen, not much at all.
Dan Fuss, how important is political silliness? Can it do damage?
Oh, yeah. Major. Particularly if it starts to influence outside of the country. And in the U.S., political silliness influences other parts of the world. I mean, I was over in Asia just for a couple of weeks, just a few weeks ago, and I heard a lot of commentary on the U.S. Political scene. Wow. And people, intelligent people saying, is the press overplaying this? I'll leave the answer to you guys.
No, I'll tell you, the press, we're sitting here with, as the press saying, is right. The press overplaying this?
But Trumpisms, you know, when he opens his mouth, it reverberates outside the USA, and it really bothers people.
Yes.
And I think you got to step back and look. 70% of the U.S. economy is the consumer. And if consumers are taking a back seat, if they're not enthused, I don't think we're going to get good GDP growth out of it.
And the frustrating thing to me is I respect a lot of good economists, particularly our own. I've never.
That's good. He's your own. So.
Right. I've never, in my experience, to my recollection, Chris, found an economist who really did predict a negative GNP.
True. That is true.
You know?
No, you look at in 2007, you look at the 08 forecast, they were always mixed to even slightly positive, and they're not predicting a decline. But certainly we're not going to have a 5% growth rate. We're going to have a very slow economy that's going to be, I hate to say it, choppy, like we're experiencing this year.
So what does that, all this negative talk, do for the investor? I mean, does this mean cash, long-term treasuries, and real estate? I mean, what does that mean as a practical matter?
Well, real estate is priced to perfection in quite a few cities in America. And what I'm hearing is people looking at real estate in the secondary markets, the vills, as they say, Nashville and other places. We think that private equity, even though it's been villainized, is still going to see some profit opportunity because a lot of the investments made in 08 and 09 are coming to fruition, and those are good times to buy. But a lot of areas are priced to perfection. So I'm looking for very low returns next year. We're going to eke it out by income opportunities and look at other assets. And outside the U.S. may be an opportunity. It sounds crazy to say Europe may grow. It may grow. At least it's cheap relative to the rest of the world.
You've ended up, by virtue of your position, at the center of the villainization of private equity. Are we going to see in the coming year Calsters release information on the fees it's paying private equity?
Yeah, we already released the fees that we pay in terms of the management fee. The big discussion has been what's the carried interest number. The carried interest number is 20% of our profits. So I can figure out our profits, I can figure out their 20%. But yes, everybody in the industry now wants to start collecting those and disclosing those, because the question isn't about us and the amount of money. It's a lot more to do with how is that taxed, and that's a Washington discussion.
Has there been a sea change? Do you think increasingly we're going to see pension funds demanding this kind of information be reported going forward?
Oh, no question. And it's not just pension plans. It's all the investors. We talk to our friends in the endowment world. They're asking for this information. The industry is changing its disclosure. You're going to see new guidelines coming out of the industry, which is both LPs and GPs changing the standards so that we have easier reporting. We can track it. We can publish it. And then everybody can do it. But there's a real negative attitude outside of New York, outside of this island. There's a negative attitude toward Wall Street. And it centers on private equity and on hedge funds.
So Chris Ailman, Calsters Chief Investment Officer, thank you very much.